Remember GameStop? That crazy stock thing back in 2021? Everyone and their grandma was talking about short squeezes and Reddit.
Yeah.
But what if I told you that some big shot investor, like a really famous one, had his eye on GameStop years before all that craziness?
It's a pretty wild story, actually, and it starts with Michael Burry. You know, the guy from The Big Short?
Oh, yeah. Thousand Crash guy.
Yep, that's him. Turns out he had a whole thing with GameStop long before it was, a meme stock.
So today we're going deep on Michael Burry's take on GameStop. We've got his letters to the company, SEC filings, all that fun stuff.
Buckle up, because we're about to see the GameStop saga through a different lens. Think value investing, market trends, and maybe a bit of cautionary tale thrown in.
This whole thing starts way back in 2019. Burry wasn't looking for some get-rich-quick scheme. He really thought GameStop had potential, like real value.
Right. His investment thesis was based on a few things. First off, he saw that GameStop had a surprisingly strong balance sheet. They had a lot of cash on hand, weren't in financial trouble like some people thought.
Right, right.
Yeah.
And this was like right before the PS5 and the new Xbox came out.
Exactly. Burry knew those new consoles were about to hit the market. He figured that would be a huge boost to GameStop's sales.
Makes sense. New consoles, new games.
Yeah.
Gotta get them somewhere.
Exactly. He also saw that GameStop was trading at a really low price, especially when you looked at their earnings and assets. So in Wall Street lingo, they were undervalued.
So was he basically betting on a GameStop comeback?
Kind of, yeah. He thought GameStop had a good chance to increase in value, and he didn't just want to sit around and wait. Burry took a more active role, started sending these letters to GameStop's board, urging them to, improve things for shareholders.
So he wasn't just buying stock, he was like trying to steer the ship a little.
Exactly. And one of his big recommendations was for GameStop to buy back their own shares. He pointed out that with their stock price being so low, they could buy back a huge chunk of their outstanding shares.
Hold on, break that down for me. Why would buying back shares be a good thing?
Okay, imagine the company's total value as a pie.
Okay, pie.
When GameStop buys back shares, it's like they're taking slices of that pie off the table. Fewer slices means each remaining slice, or share, is worth more.
Oh, I see. So each share becomes more valuable?
Yep. Burry actually calculated that GameStop could buy back more than 80% of their outstanding shares. That would make each remaining share worth a lot more.
80%. Wow, that's a crazy amount. Did he explain how he came up with that number?
Oh, he did. Laid it all out in his letters. Pointed to things like the low stock price, how much cash they had, and how it would affect things like earnings per share.
Okay, I sort of remember that from like Econ 101. And then there was something about tangible book value.
Oh, yeah. Think of that as the company's net worth if they sold off all their stuff and paid off all their debts.
Okay, so it's kind of like the company's baseline value.
Right. And Burry argued that increasing that value would make GameStop look way more attractive to other investors.
Gotcha. So he was trying to show them that this buyback was a smart financial move, not just some risky gamble.
Exactly. And remember, this is all before the whole new console release. He was already factoring that into his calculations.
Right. He really seemed to get the whole gaming landscape, even back then.
He did. And that understanding is really important when we start digging into some of the challenges GameStop was facing, even while Burry was so bullish on them.
Okay, so it's not all sunshine and roses then.
Well, Burry wasn't naive. He knew the gaming world was changing, and he saw some big hurdles ahead for GameStop, even with all that potential.
Like what kind of hurdles?
Like the whole shift to digital downloads, platforms like Steam, and then there was the rise of game streaming with sites like Twitch.
He saw that coming back in 2019.
He did. In fact, he actually called out GameStop for missing the boat on some of these trends, like when they had the chance to buy Twitch.
They could buy Twitch. Wow.
Yeah. Missed opportunity, according to Burry. And he saw that as a sign that GameStop needed to step up their game, be more innovative and responsive if they wanted to stay competitive.
So he was basically a supportive critic. Like, hey, I believe in you, but you got to get your act together.
Exactly. He saw both the upside and the challenges, which pretty insightful considering this was all years before the meme stock craziness exploded.
Right. This is the OG Michael Burry, value investor extraordinaire, not the meme stock guy.
100%. His GameStop play was all about careful analysis and market savvy, not some social media hype train.
So what happened next? Did he hold on to his GameStop shares through all the craziness of 2021?
Actually, that's where things get really interesting. He didn't. Sold everything before the price went bananas.
Seriously, he missed out on the biggest part of the story.
He did, and you know what? He even spoke out about it afterward, warned everyone that the stock price was way out of whack, called it, I think, unnatural, insane, and dangerous.
Sounds like him.
Yeah, he was worried about all those everyday investors getting caught up in the frenzy. But hold on, let's back up a sec. Before the meme stock stuff, back when Burry was still involved, he really dug into the nitty-gritty of GameStop. Like, he got his hands dirty reading through their financials, their strategies, everything.
Right, he wasn't just throwing darts at a board.
Nope. And that's where those letters to the board come in. He sent his first one back in July 2019. And let me tell you, he didn't mince words.
I bet. This is the guy who predicted the housing crash, so I'd be listening if I were them.
Oh, they definitely paid attention. And Burry gave them a whole roadmap for why he thought GameStop was seriously undervalued. He kept hammering on this idea of a share buyback program. They had already approved one for $300 million, but Burry thought they were dragging their feet.
So he wanted them to speed things up.
Big time. He kept saying, look, your stock is under $5 a share. This is your chance to scoop up tons of those shares like a Black Friday sale.
Makes sense. Buy low, sell high, right?
Classic value investing. But it takes guts to do it, especially when everyone else thinks the company's going down the drain.
Yeah, you got to have some serious conviction to go against the crowd like that.
Yeah.
So he laid it all out for them, huh? Like, here's the math, here's why this makes sense.
Oh, yeah. He went into detail about how much cash GameStop had, over $500 million, and how little debt they had. His point was they could easily afford that $300 million buyback and still have plenty left over to, keep the lights on and invest in the business.
So he wasn't telling them to blow all their cash on buybacks.
Nope. It was all about using their resources strategically, maximizing value for shareholders. And remember, this was before the new consoles hit the market.
Oh, right. He was already betting on that sales boost, so he really understood how the console cycle worked, how it would impact a company like GameStop.
He totally did. And that's a big part of why he was so bullish on them. He thought the market was too focused on the short-term struggles, not looking at the bigger picture. The console launch was going to be a game changer.
So he was thinking ahead, seeing things that other investors were missing.
Exactly. And that's where his whole understanding of the gaming world comes in. Burry wasn't just crunching numbers. He was thinking about the big picture trends, the whole landscape of the industry.
Okay, let's unpack that. What do you mean?
Well, even though he was so optimistic about GameStop, he wasn't blind to the challenges they were facing. Like, he saw the rise of those digital platforms, Steam and all that, and the whole streaming thing with Twitch was just taking off.
You saw that way back then.
Yep. In fact, he actually criticized GameStop for missing out on some of those opportunities, like when they had the chance to buy Twitch but didn't.
Wow, they could have bought Twitch. That would have been huge.
Right. Burry thought so too. He saw that as a sign that GameStop needed to be more proactive, more willing to adapt and innovate.
So it was like he believed in them, but he was also pushing them to be better, smarter.
Exactly. He wasn't just a cheerleader. He was a critical voice pushing them to evolve. And it's actually pretty amazing how he balanced that optimism with a really clear-eyed view of the challenges they faced. Like, he saw both the potential and the pitfalls,
Yeah, it's like he had this gut feeling that GameStop could be something special, but he also knew they had a lot of work to do.
Right. And he wasn't afraid to challenge the leadership, even though he was a major investor. He basically told them, look, you need to shake things up, bring in new people, new ideas.
So he wasn't just sitting back cashing those dividend checks. He was actively trying to shape the future of the company.
Exactly. And it wasn't just about that share buyback program. He wanted them to revamp the board of directors, bring in folks with more experience in the video game industry. He even had this wild idea about a sale leaseback of their properties to free up even more cash.
Sale leaseback. That's kind of a head scratcher. What's that all about?
It's basically a way for a company to sell off some of its buildings and then lease them back from the buyer. They get a big chunk of cash up front, which they can then use to invest in the business.
Ah, I see. So Burry was thinking outside the box, trying to find creative ways to boost their financial position.
Exactly. He wasn't afraid to make bold suggestions. And this is where his deep understanding of both finance and technology really shines through.
Okay, explain that one to me.
Well, he saw the value in GameStop's core business, but he also knew that the whole gaming world was changing at warp speed. He wanted them to capitalize on those changes, not get left behind.
He was pushing them to embrace the future.
Exactly. And he wasn't shy about criticizing their management and some of their past decisions. He specifically called out things like that whole venture into cell phone retail, saying it was a distraction from their core business.
He wanted them to focus on what they knew best, which was video games.
Right. double down on their strengths, their brand recognition, all that. He wasn't saying they should abandon physical stores altogether.
But they needed to be smarter, more strategic about their investments, and prioritize things that aligned with the future of gaming.
Exactly. And it's pretty amazing how he spotted these issues so early on. It shows the power of doing your homework, analyzing the fundamentals, and thinking for yourself.
Right, he wasn't just following the crowd. So we've talked a lot about how passionate Burry was about GameStop and their potential, but eventually he sold all his shares. When did that happen?
He started selling in late 2020, well before the meme stock frenzy hit in early 2021.
So he totally missed out on those crazy price swings.
Yep. But it was a calculated decision based on his assessment of the market and his overall investment strategy.
Did he ever explain why he sold?
Not publicly, no. But it's likely that he saw the stock reaching a price that he felt accurately reflected its value. He had made a profit and decided to move on.
So in a way, he was proven right about GameStop's potential, even though he didn't ride the wave all the way to the top.
He definitely saw something that others missed. And his approach is something we can all learn from, whether we're investing or not. Do your research, think independently, and don't be afraid to go against the grain if you believe in your analysis.
It's about understanding the fundamentals, thinking long-term, and having the courage to trust your own judgment.
Exactly. Burry's story is a great example of how sometimes the best opportunities are the ones that nobody else sees.
This has been fascinating. We've seen how Burry was so in tune with the gaming industry and how he really pushed GameStop to adapt to a changing market.
He was a true advocate for their evolution, and it's interesting to think about how some of those changes he was pushing for might have actually laid the groundwork for some of the moves GameStop is making today.
Let's get into that. What specifically did Burry recommend that connects to what GameStop is doing now?
Let's go back to those letters and see what we can find.
Okay, so we've talked about how Michael Burry was pushing GameStop to evolve, and now they're doing all this stuff with e-commerce, NFTs, even like trying to reinvent their stores.
Yeah.
Do you think he kind of saw this coming?
It's tough to say for sure, but if we go back to those letters, there are some things that really jump out. Like, remember how Burry was all over GameStop for missing the boat on digital stuff? Especially when they didn't buy Twitch.
Yeah, he really thought they messed up there.
Totally. He was like, GameStop has the name, they have the customers, they could have been huge in game streaming, but they just didn't have the vision, the willingness to adapt, you know?
So maybe, even though he left, his criticism kind of pushed them in a more digital direction.
It's definitely possible.
Yeah.
Sometimes a little tough love can be the kick in the pants you need.
And it's not just screaming anymore. They've got that NFT marketplace thing. They're messing around with blockchain, even trying to turn their stores into, like, gamer hangouts.
It's a bold move, that's for sure. We'll have to see if it pays off.
Right. It's a gamble.
Mm-hmm.
But it shows they're not afraid to try new things. It's like they're trying to figure out what it means to be a game store in the digital age.
Yeah, and that's something I think Burry would liked. He always wanted them to be more innovative, think about the future. Remember that sale-leaseback idea?
Oh, yeah, where they sell their buildings and then rent them back.
Right. His point was to free up cash so they could invest in the business.
And they've definitely been doing that. They've raised tons of money from selling stock, and they're using it for all these new projects. It's like a completely different company than the GameStop Burry invested in back in 2019.
Totally. They've gone from this struggling chain of stores to a company that's like diving headfirst into the future of gaming.
And they've got a whole new leadership team now, people who actually get the gaming world.
Which was another thing Burry was pushing for. He wanted more gaming experts on the board.
It's like he planted the seeds for this whole transformation, even though he wasn't around to see it happen.
He definitely played a part in pushing them in a new direction. And honestly, it kind of lines up with what he thought about the future of gaming.
It's funny how some of his criticisms, which probably sounded harsh at the time, might have actually helped GameStop become what they are now.
It shows that sometimes the people who challenge you the most are the ones who can help you grow the most.
So back to our original question. Do you think Michael Burry would still think GameStop is undervalued today?
Who knows what's going on in that guy's head? But knowing how he thinks, I think he'd be interested in what they're doing.
They're definitely taking risks, but they're also adapting and trying new things, which is what Burry always wanted.
And they're doing it with a solid financial foundation and a bunch of loyal customers. Those were always big things for Burry.
Of course, the gaming world is super competitive. No guarantees that their plan will work out.
True, but at least they're swinging for the fences. That's got to count for something.
Absolutely. They're not just going to fade away quietly. They're trying to create their own future.
And that's a good lesson for all of us, right? Whether it's investing, business, or just life in general. Don't be afraid to change things up. Try something new. Think differently.
Sometimes the biggest rewards go to the people who are willing to take a chance.
Well said.
Well, this has been a really interesting look at Michael Burry and his whole take on GameStop.
Yeah, it shows that even when things are crazy, when everyone's losing their minds over meme stocks, there are still smart lessons to be learned from people who see things differently.
Thanks for joining us for this deep dive. We'll see you next time.